Indian startups navigated a severe funding winter in 2022, which brought with it layoffs and a re-evaluation of the basics of doing business. Year to date, the sector witnessed a decline of 38% in total funding in calendar year 2022 at $25.5 billion compared to $41.4 billion in the previous year. This was the finding of a report by market intelligence platform Traction. The reason for this decline was a 50% drop in late-stage funding. The number of investment rounds also shrank by 32%. According to Traction, the retail startup sector witnessed a 57% decline in funding between January and November 2022 compared to the same period in 2021. The fintech sector saw a 41% decrease in funding compared to last year. The edtech startup sector, which benefited considerably as classes and tuitions moved online during the COVID-19 pandemic, also saw a significant 39% drop in funding during this period compared to last year. The edtech sector was hit particularly hard. Valuations in the sector had run up based on expectations that the gains made during the pandemic could be sustained. But the back-to-school trend, which took hold once the pandemic's effects moderated, has brought the sector's future prospects into question. The troubles faced by edtech giant Byju's, India's most valuable startup, were examples of how the challenging environment of 2022 exposed some of the underlying infirmities in Indian startups. Byju's was 18 months late in publishing its FY21 results, which led to questions from regulatory authorities and even in the parliament. As the year came to a close, reports emerged that the National Commission for the Protection of Child Rights had learned that Byju's was allegedly purchasing the phone numbers of children and their parents. Parents were allegedly threatened that the future of their children would be ruined if they didn't buy courses from Byju's. Last week, Byju's attended a meeting at the Commission in response to summons issued by the body. In its statement, the firm said that the question of mis-selling did not arise because its marketing professionals did not have the authority to close the sale of a product at the point of sale. Byju's has also reportedly agreed to modify its refund policy and undertake an affordability evaluation of parents before offering them courses and loans. Meanwhile, the child rights organization was set to meet with Byju's on Monday again to gather further details on this matter. Amid these troubles, Byju's also had to take a hard look at rationalizing its workforce. In October, the company announced that it would lay off 5% of its workforce, or about 2,500 employees. The development was a reflection of the other trend that gripped startups in 2022: layoffs. A group of 52 Indian startups, including several unicorns and soonicorns, has reportedly laid off almost 18,000 employees during the year. Of the total employees fired, about 85% worked for edtech, e-commerce and consumer services startups. It is evident that in order to survive the funding winter, Indian startups are now paying more attention to unit economics, a fact that was illustrated by the layoffs that occurred in 2022. The final indicator of how tough 2022 was for the sector is that India's unicorn rush also slowed down significantly. While 13 Indian startups attained unicorn status in the first 3 months of 2022, compared to 8 in the first 4 of 2021, the pace of startups turning unicorns dropped sharply as the funding winter set in. Only 21 Indian startups reportedly entered the unicorn club in 2022, compared to 44 in 2021. Clearly, 2022 was a year the sector will not forget anytime soon.
There's a listing of several large startups. That's a big event that has happened. If you look at it, we always thought about the fact that can these startups get listing done? And that has happened. But the performance has been below expectations. And I think largely reality has returned in terms of valuations, expectations for profitability, sustainable businesses, and cost control, frugality has been rewarded. So those, I think, are the big trends in terms of startups for 2022.
Most of the startups have cut down on their costs, cut down on overspending, maybe laid off a few people, and they really understood that capital is scarce, and they're focusing on improving the business. And the last point is there were many IPOs, and most of the IPOs are quoting below their entry price, and they're now trying to find a viable business model. So I think this decline and the downturn has helped people become more focused, made them more competitive, and created more hunger in them. So I think it's been a good thing because the exuberance of the previous year has disappeared and reality has sunk in.
Overall, 2022 was a year of several tough lessons for the Indian startup sector. The days of easy money are over. Growth at all costs is no longer enough for investors. Instead, they will be increasingly looking for a path towards profitability. Most importantly, the days of negligible regulatory oversight are over, and good governance is mandatory. Indian startups will do well to internalize these lessons since the projections for 2023 from several quarters aren't too optimistic. In October, Traction co-founder Neha Singh pointed to global macroeconomic conditions, particularly the fears of a worldwide recession, as one reason behind the slowdown. According to Singh, the funding slowdown in India was expected to continue for the next 12 to 18 months, and its effects were expected to intensify going forward. More recently, Flipkart CEO Kalyan Krishnamurthy reiterated that the startup funding winter could last another 12 to 18 months, and the sector could face a lot of turmoil and volatility. Not everyone is so pessimistic about 2023, but all startups will not fare equally in the year to come either.
India-focused funds in the venture capital space have a significant amount of dry powder. You're going to find there will be good amount of capital available for solid, sustainable startups. This is one of those years where I'm going to see essentially two levels of startups coming through. The successful ones, which I believe are the ones where there's a good model, where there is profitability or a path to profitability, those will do well. I think the ones where the differentiator exists, those startups should be able to access capital.
Well, I think if you look at 2022, in the last 9 months, investing has been more sensible. A large number of startups have got Series A, Series B money at reasonable intervals, and they've got smaller checks. So I think 2023 will follow the trend. More money will come in than what we got in 22. Valuation will be more reasonable, and the companies which are showing growth and the startup which are got a good revenue model, we're showing growth, will get more capital.
Whether 2023 proves to be better or worse than 2022, one thing is for sure: the environment has changed for Indian startups. With the post-pandemic reality check setting in, they will have to adhere to increasingly disciplined business plans and be ready for enhanced regulatory scrutiny.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.